Hey guys, David Robinson here. Really excited about our episode today. I've got Anthony Scandariato with me. Anthony, thank you for coming on the show. Looking forward to getting into our conversation. Before we dive into things, if you don't mind, let's back up. Let's talk a little bit about your background and your backstory and how you got into the real estate investing space.
Definitely, David. It's an honor to be on your show. I'm really excited. I got into real estate investing in 2014. I used to work in the startup world for a consumer product company. We were selling sunglasses and sweaters to college bookstores. And I wasn't really passionate about it. It was a great couple year run startup, but I've always had an interest in real estate. From that experience with the startup, was able to learn a lot of entrepreneurial skills and saw those skills transfer over to the real estate industry. Ended up getting a job for another real estate sponsor and operator in 2014, and they were acquiring multi-tenant Class A office buildings up and down the East Coast. So any office building that had investment grade tenants. That were usually the deals were like 50 million and up. So it was more institutional
Hmm.
size type of property. So I started out as an analyst in their acquisitions team, kind of just underwriting, and slowly, worked my way up in the firm. Helped with the capital raising on both the debt and equity side. Ended up sourcing a bunch of deals. So during that 6 year run, I was there. I helped basically double their portfolio to about, I want to say, half a billion to a little bit over a billion. I started my company, Red Knight Properties, and we are a boutique value add multifamily real estate investment company as well as property management company. We have about 800 units right now, about $100 million under management in 4 different states, hopefully about to be five. And, we're focused on what I was focused when I worked for my other sponsor, just a different asset class, value add, middle market, multifamily opportunities that are mostly garden style within an hour of a major metropolitan area, what we like to call a secondary market, 1 to 2 story walk up, class C that we like to turn around to C plus, B minus type of assets, create the value, buy for cash flow, and hold on to it, either refinance if you want to hold the asset or get rid of them within that kind of like 3 to 5 year investment period. And I started out, buying two-family homes on my own, kind of learned the ropes myself. Obviously, had the institutional experience. Um, Built about 70 unit portfolio between myself and my business partner. Did a couple sales and refis, went full cycle, and then felt comfortable to do larger deals like 50 plus. And now we, bring capital in from different partners and investors, and we invest as well. So it's been a really great experience, and looking forward to future growth.
Oh, that's great. Cool story. Let's back up. I want to dig into a few aspects of that. Backing up to 2014, when you started working with the other investment firm, what had been your background up to that point? I mean, obviously you're an entrepreneur, but had you gone to school for finance, or what was your background from an education standpoint?
Yeah, I actually studied applied economics and management, so just call it, general business. I didn't study any real estate, but during my college years, I was working on the startup I mentioned in the beginning with a couple of my college roommates. So that's literally what we did. And when we were in college, I didn't really party that much, a little bit, but I didn't have the typical college experience. I would say that, um, you know, maybe someone average, join a fraternity. I didn't do any of that. We just focused on trying to grow the business. But again, it got to a point where I realized I wasn't passionate about the business, and I love real estate.
Yeah. And so when you started working with that company, then was that really your first experience, like really diving headlong into modeling deals out and figuring out how to invest in these larger projects? Is that your first
That's
experience
that.
with that?
Yeah, absolutely. I ended up getting a few certifications before landing that job because that
Hmm.
was, because I would go on interviews, I tell the story, and they're like, "That's great, but do you know anything about real estate?" So, there's some Argus certification class I took, modeling classes I took. I do have some family members in the business that own
Mm.
apartments as well, so I was able to pick their brains and see their models. So obviously that helped further the education
Yeah.
along.
So, you were part of, growing a portfolio from, I think you said a half a billion to over $1 billion
Yep.
in, a 6 year stint there. And it sounds like you had a lot of experience. Maybe just talk to us a little bit about what that experience was like and how that set you up for starting your own investment firm.
It was great. It was smaller. I mean, you have $1 billion in management, but we only had on the corporate side maybe like 6 employees, give or take.
Mm.
The property management for the most part was third party. They operated up and down the East Coast, so it was anywhere from New Jersey, which is where I'm based and where they were based, all the way down to Florida, and kind of like they have assets in Kentucky and Georgia and Maryland. So I got exposed to all those markets, and now I started acquiring properties in those markets where I'm, for Red Knight, my company. So you obviously felt comfortable with that, but it was a different asset class. I would say office is definitely, just from a risk adjusted standpoint, is definitely, in my opinion, is riskier, especially 2022 with pandemic kind of lingering a little bit. And I wanted to focus on apartments, kind of saw writing on the wall with the asset class a little bit. I hope I'm wrong. I hope it fully recovers. But that was another reason.
And so in 2020, so you started Red Knight Capital, correct? Red Knight Capital, right?
Red Knight Properties, yeah. We
Red
might
Knight
change
Properties.
it to Red Knight Capital.
All right. Hey, I just coined it for you. All right.
Yeah.
So Red Knight Properties started in 2021. You've got 800 units and $100 million under management at this point. So you're off to a great start in a very short period of time. What was that transition like, going from sort of that corporate, maybe, I mean, it's not fully corporate. I mean, it's a pretty small company from an employee standpoint,
Yeah.
personnel standpoint. But that environment to starting your own investment firm, were there any challenges or anything that you could share with our listeners that might be helpful to them if they're looking to do the same thing?
Yeah, I would say I started out, it wasn't like I just, okay, 2020, now I have 800 units. That's not what happened. So to back up a little bit, I bought my first two family in 2016 on my own money. I managed it.
Gotcha.
I evicted the tenants. I renovated the units. I did everything myself. So I got to learn a little bit. Then from there, I bought another two family with a partner that we flipped. So I had experience on my own, and then I had experience with the partner. And then I met my business partner where we bought a 10 unit. And then we stabilized that we bought that in like 2017. It's fully stabilized in 2018. 10 units you can handle while you're working a full-time job.
Sure.
So he did most of the management anyway, but I helped guide, of course. I put up money as well. It was just a straight joint venture. And we bought a 10, and then we bought another 10, and then we bought another 12, and then we bought a 20. So we had about 70 units together. So the cash flow coming from that, as well as the couple properties I bought, I want to say almost replaced the W-2 by the time I left. And by the time I left, I had one syndication the larger deal under contract that we were closing in December of 2019, in which we closed. And then I had another one already under contract set to close in March. So for me, with the transition, it was like, I'm kind of just going into a new job. I didn't think about it. I wasn't scared. It was very different. If you had things, I had kind of things like lined up methodically, as opposed to just going out and being like, oh, let's see what happens. So
yeah, that makes a lot of sense. Thank you for clarifying that. So while you were working with the other firm, you were doing your own investing on the side, building up a small portfolio. That portfolio started to generate enough cash flow and gave you enough experience to start to make that transition. How did you go about finding your business partner?
I actually met him through a coworker of mine at the old firm I used to work for. My partner's a ex NFL player for Cincinnati, the Bengals, just in the Super Bowl this past year. Played for a couple other teams as well. And he was retired, lives in the town very close to me, in his early 30s when he retired, but didn't really want to retire, just stay at home down for a couple of years, wanted to be active, started reading about multifamily. We happened to meet each other. He came into our office one day, met my former boss, and we just hit it off. I told him I was buying a couple two families, and he's like, hey, this is exactly what I want to do. Next deal, why don't we try to buy something a little bit larger and let's figure it out. And then we did that. And, it's a great partnership. He's kind of focused in terms of roles now. I'm more property management, construction management, and I'm more acquisitions, asset management, kind of similar to what I was doing at the old firm.
Yeah, love it. Okay, well, let's move things forward a little bit here, and let's talk about your specialty, which is on the acquisition side of things. What's the biggest challenge? What's the biggest challenge that you're facing right now as far as acquisitions is concerned? And maybe some insights that you might be able to share with our listeners about finding good opportunity and being competitive in a crazy market that we're in today.
Yeah, and we're recording this at the end of the first quarter of 2022 for that context. And obviously, rates are still very low. They're probably continue, to stay relatively low, even with the increases. The way I look at it is, there's a supply and demand issue still, and the market is very competitive still for multifamily. It's gotten to the point where it's been so competitive in the markets that we already own, we'd have to look at a market.
Mhm.
We're focused on kind of like East Coast, New Jersey, New York State, Pennsylvania, Florida is where we own right now. I started expanding. Now I'm expanding to the Midwest just because
Mm.
the prices are insane in some of the markets where we acquired over the past few years. And we're starting to sell some assets that we didn't, that had that 5-year horizon, but now it's a 14-month horizon and we're going to make, 2x our money in 14 months. And we've already done that on a couple of deals. So market timing is one, but to be competitive, find new deals. It's about your track record, good relationships with brokers. 90% of our deals are through brokers. We don't send out yellow cards. They're just going to get thrown in the trash. And, we specialize on the middle market. So the 50 to 200 unit properties, they're not really, $5 to $20 million purchase price, give or take. They're a little bit underlooked by the institutions. So it's not as much capital chasing it, in my opinion. So a little bit less competitive than chasing the 30 pluses. So we just like to do what we say we're going to do. Don't retrade a deal when you got it under contract. Have everything kind of lined up. Have references from other brokers who've closed with you. If you're a newbie, then it's always good to partner up with another sponsor. If you're trying to be active, obviously passive is a different story. But it is competitive, but you can still get deals done.
And you mentioned, transitioning from, mainly East Coast markets all the way down to Florida, and then transitioning to the Midwest. Making that transition, how long has it take? Have you acquired anything in the Midwest outside of those markets yet, or are you still actively looking for
We're
something?
we're just looking right now. We're in market
Okay,
research phase. We got a couple deals possibly about to go under contract, but yes.
gotcha. Okay, so that process from when you say, you know what, we should start maybe exploring the Midwest from a time horizon, maybe help our listeners understand, the time horizon that it might take for someone who has some experience, but is looking to shift market focus to actually being able to penetrate the market and get a deal. You're to that place where you may be getting something under contract. What does that timeline look like, and what were the biggest challenges that you faced in making that transition?
Yeah, I mean, if you're looking at deal, it's always good to grow within the markets that you're already in because that's the easiest thing to do, and it'll take you the least amount of time, I would think, to underwrite a deal or to find a deal. We struck out for the past, I would say, 5 months to find any new opportunities. We obviously closed on a lot over the past couple of years, so we don't want to move too quickly and too fast and blow up the business. That's not our goal. So we're very methodical with what deals we're looking at and how we're growing. So because we're selling a property, now we're like, okay, well, everybody's going to get their money back. Where do they reinvest in, or they're going to want to know what's going on with another opportunity. So that event is happening. So we kind of kept that in mind. So for the past, I would say, like I said, 3 to 5 months, we've been looking at some of the other markets outside of where we're looking. And if an opportunity happens to come up in the markets that we're in, then great. But at this point, some of the numbers, I'm seeing properties retrade in the market cycle 6 months after the sponsor bought it for double, and they did nothing. It's one thing if they added the value and they want the
Mm-hmm.
higher price, but they did absolutely nothing. And I'm just not that type of. I don't want to be the sucker that buys that. I want to be on the other side. So I'm seeing that happen a lot in the markets we're in, and we just strike out after strike out after strike out. So that's why we made the decision to not completely let these markets go, but keep our expand our horizons. And we did that from the get go because we started in the state of New Jersey, which is where I reside with my partner. As you know, New Jersey's very expensive, so is New York. So we made that same decision back in 2020. Things were getting crazy in New Jersey price wise. We were like, why don't we go just over the border in Pennsylvania? Let's try to buy. And we did.
Mm-hmm.
So we got some out of state experience and then, bought the Florida properties more out of state. So now we feel more comfortable with other markets where we can't just drive to in an hour or two.
Yeah, love it. So, where do you see your business going in the next, 2, 3, 4, 5 years? What are you looking to accomplish?
Yeah, we want to be a large workforce housing apartment owner. We want to be known for improving communities and improving lives of tenants and our partners and investors. And I don't have like a unit count, so to
Sure.
speak, but we want to keep doing good deals, good value add opportunities. We usually do maybe 4 to 5 a year. Maybe ramp that up a little bit, hire some new folks to try to ramp that up. But it's I don't really have a unit count right now. We're sub 1,000. Maybe we'll be at 2,000 within 5 years. It depends because some markets, 100 units is like 4 million. So
Right. Right.
it's all relative when you speak about it, and it's not a matter of the number of units you have. It's a matter of how many good deals. I can't tell you how many new sponsors are out there. Oh yeah, I own. I'm a part owner in 3,000 units. Okay, that's great. You own 1% of 3,000 units. Awesome. And what did you do with those 3,000 units? Oh, I'm a general partner with 15 other guys on a deal. Like, dude, you're not doing anything. We're the one of the only general partners on our deals. We're the ones doing the property management, executing on the business plan, reporting to the investors, pretty much everything from soup to nuts. We don't have construction in house. It's the only thing. So I'd like to, but it's challenging when you're in different markets. So I just like to be known for doing good deals, doing what we say we're going to do, improving communities, improving, investors' pockets, and helping more people escape the 9 to 5, kind of like how I did. I have a couple of investors who are almost at that point, but they're ready just through coming along with us or doing a couple of deals on the side on their own. It's been really exciting.
Yeah, that's great. And so, you mentioned, and I assume that, acquiring new investors or making new connections with investors will be a big part of your, business plan moving forward. Up to this point, you guys have done, some impressive things in a fairly short period of time. But what's your best source for finding new investors at this point?
Yeah, definitely networking. We started out with our friends and family. I had colleagues that I used to work with for the first capital raise I did. Colleagues I used to work with. My partner has a professional record as well, playing for the NFL. So some of his network came in. So we could work together on both of that. But now, David, it really comes down to the track record. And okay, what have you done in the past? What kind of returns have you given? What type of deals have you done? How quickly were they turned around? Once you have a few case studies, which we do now, they kind of, I wouldn't say come to you because we're always just networking and love to partner with other people, but it's, I would say it gets a little easier.
Mm,
Wouldn't say it was super hard before. I think if I didn't have the professional background in commercial real estate, it would be very difficult. But with my professional background and my partner's professional background, we made a pretty good team. And like you said, in a relatively short amount of time. I mean, I know people have raised much more than us in short amounts of time, but like I said, we're kind of really hands on, a little too hands on with everything. But yeah, like I said before, we're trying to do a few smart, good deals a year. We're not trying to do 10, 15 deals a year that are okay. So a
yeah.
little bit different approach.
Yeah, I love that mentality. Well, look, I know we're a little bit short on time today, but I want to start winding down here. I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
Yeah, I mean, the supply chain obviously is an issue nationwide. Renovations on some of the units are taking a little bit longer than what they used to, just because of materials and other things not being done on time. So make sure if you're doing a value add plan, try to partner with a good contractor or order materials in bulk early. So we're kind
Mm,
of learning that right now. On the staffing side, make sure you screen your maintenance techs or leasing agents. We had a few bad people from the beginning, but we're learning. We didn't do background checks. So there's a couple of things more on the management side, I would say, that we weren't 100% happy about, but now we're making a change.
yeah, love it. What's something that you're just absolutely knocking out of the park right now in your business that we could all learn from?
I'd say communication with investors and partners. I send out monthly updates with what's going on. I send out quarterly financials, quarterly distributions at this point. But a lot of my partners, they tell me, they said, I really appreciate the monthly updates. I don't get this from other investments I'm in. And the transparency is next to none. I like to do that because it keeps my head in check and it keeps me focused on, okay, what's going on with this property? And it's good to just share that, even if it's bad news, just share it. So I don't know. I think we're better at communicating what's going on. I think that's important because you're taking people's hard-earned savings and hard-earned cash sometimes, and you feel obligated to perform on it, and you should be. So just my 2 cents.
And I'll speak to that a little bit. Our mutual connection, how we connected as an investor of yours, and spoke
Yeah.
very, very highly of your communication. That's one of the favorite things that
Thank you.
he likes about investing with your team is the communication. And so I can tell you, at least from his experience, that is the case. So good for you guys. That's great. Well, look, Anthony, I know we're short on time today, but I've really enjoyed, learning a little bit about your business and what you guys have done over the last few years. What's the best way for our listeners to connect with you and learn more about what you have going on?
Yeah, best way. We have a free ebook right now. It's called How to Leave Your 9 to 5 Through Financial Independence. Go to our website. It's redknightproperties.com, red knight with a K. It pops up. Put your name and email in there. I'll send that to you, and then you'll get all my contact information from there in an email format. But you can still find me, Anthony Scandariato or Red Knight Properties on Facebook, Instagram, Twitter, LinkedIn, you name it.
Perfect. We'll have links to that in the show notes. So if you've enjoyed our conversation and learning a little bit about Anthony and his business, go down into the show notes right now, click on one of those links, and connect with him there. Again, Anthony, thank you for coming on, sharing a little bit about your business and your personal journey, and I look forward to connecting with you again soon.
We also have a podcast called Discovering Multifamily, which I'm hoping David's going to come on as well shortly. So
Yeah,
hopefully
looking forward to it.
check that out on iTunes, pretty much every platform you can find us on.
Okay, awesome. Well, Anthony, again, thanks for coming on. I appreciate it, and we'll chat with you soon.
Take care.
Okay, bye-bye.